Hello everybody and welcome to this session where we will be talking about the latest trends in the stock market and its outlook. We have with us Dr. Vijayakumar, Chief Investment Strategist of Geojit Financial Services. Welcome to the session, sir. 2018, it started out on a very low downtrend. We've seen especially the mid caps and the small caps in a losing trend. In the last couple of months, we've also seen the large caps, showing a bit of volatility. So the markets have turned extremely choppy and volatile. What are your thoughts and opinions on this trend?
Well, you are right. The markets have turned very volatile, extremely choppy. Last year, the year 2017 was an unusually stable and steady year. In the US, that was the stablest and steadiest year in US history with the least volatility. Yeah. They have also turned volatile this year. This year in 2018, S&P 500 has fluctuated by more than 1% on 49 trading days. That also is very unusual. So this is global, and the volatility in emerging markets have increased substantially in recent times. The reason for this volatility are many. There are a large number of headwinds and tailwinds which the market is facing right now. In a bull market, you have very strong tailwinds, and these strong tailwinds will take the market up with occasional corrections, of course. In a bear market, the headwinds will be stronger than tailwinds, so it will take the markets down. Sometimes you have neither a strong bull market nor a bear market, but a very volatile market as we are facing right now. And this volatility is because of the alternate bouts of headwinds and tailwinds which the markets are experiencing.
Right. Can you please detail on the headwinds and the tailwinds that we are currently facing?
Yes, first let us talk about the headwinds. Last month, October, the market is corrected by almost 5%. We corrected by more than 13% from the peak. Yeah. Sensex touched a peak this year of 38,312, and it touched a low of 33,349. Yeah. So last month it corrected by 5% in just 1 month. The reason for that correction was we had a very strong concentrated dose of headwinds. One, crude rose to $86.70 a barrel, a sharp spike within a very short span of time. That led to a worsening of our trade deficit and our current account deficit. There were fears whether the trade and current account deficit will go beyond safe limits. Consequently, rupee depreciated. Along with this, the US bond yield, which is a very important indicator of capital flows all over the world, it touched a high of 3.26%, 10-year bond yield. So if an institutional investor is getting 3.26% on your safest asset class in the world, that is risk-free return, what we call in finance risk-free return in the safest asset class in the world. That will lead to a lot of capital outflows from emerging markets to the US market. That happened. There was huge selling by FIIs, continuous selling by FIIs. All this joined together to produce this very strong dosage of headwinds that I referred to. So that led to this correction. And now in November, markets are looking up because some of the headwinds themselves have turned into tailwinds. Okay. Crude was a headwind in October when it touched $86.70 a barrel. But now it has crashed. Okay. It has actually crashed by almost 25%. From the peak of 86.70.
It has been continuously on a downtrend.
Continuously coming down. Now it is less than 66. Yes, yeah. Yesterday it was less than 66. So as we speak, it is less than 66. Actually, in one day it declined by 7%. Yeah. The reason is crude is not a commodity now. Crude is a financial asset in which billions are being invested. Therefore, you find this huge volatility. So what we are witnessing now is this alternate bouts of headwinds and tailwinds, and also rupee has started appreciating. Right. So FIIs have stopped selling. Right. FIIs are again putting money, though not in big amounts. They have ceased to be sellers and they are buyers. Okay. So these headwinds have turned tailwinds. And also there are some positive news on the economy. Inflation is very much within the RBI's comfort zone. October data is very comfortable, 3.31% is the CPI inflation in October. So that means RBI is not likely to hike the rates in the December monetary policy. So these are the headwinds and tailwinds which the markets are facing, and that is producing the volatility.
Right. So, I mean, even in the stock market also, we've seen this volatility for some time now. Do you see an end to this volatility? Do you see it stabilizing, especially with the elections also around the corner? The big states have their elections. The general elections are coming up next year. Now it is more or less an intraday traders market, a derivative traders market. So do you see an end to this volatility and stability coming back into the market?
Volatility is the name of the game in the market, you know, so it will never end. But then the heightened volatility can come down. But we expect the market to remain volatile for the next several months, let us say 6 to 7 months, till we have a clarity on the election outcome. There can be a clarity even before the elections, once the seat arrangement, adjustments, etc. are over. And some polls come out with their predictions, we may be having some clarity. But then next several months, 6 to 7 months, are likely to witness heightened volatility in the market. So as you said, presently it is a traders market, but then traders also have to be careful because only professional traders who operate with strict stop loss can make money in the market. But this volatility, this choppiness can be a boon, a blessing for retail investors. In the short run, volatility might lead to short-term losses also. Even for SIP investors, this is one concern among mutual fund investors. SIP investors, particularly those who came into the market during the last 1 year, 1.5 years, 18 months, they are experiencing negative returns. But then these negative returns will translate into very attractive positive returns once the market stabilizes and starts moving up. Right? So traders opportunity is there, but then traders have to be careful. Retail investors, there will be very good opportunities.
You were talking about the elections and its impact. Do you think it will have any bearing on, you know, how the stock market will progress in the next year?
Yes, elections are very important. Elections and the governments that will be thrown up by these elections, the nature of the government, that will be very important. The market doesn't have any preference for a particular political party. Market wants a stable government, a strong government, a pro-market government, a government that implements market-friendly policies. So whichever party that comes to power, or a combination of parties or coalition, can put in a stable government with a strong leadership and a market-friendly economic policy, the market will welcome. But if we have an unstable coalition, that can be problematic.
Now, coming back to the stock market, sir, I mean, I think last 2-3 months we've been seeing a lot of sectoral news flow in which some sectors have been really impacted by the news flow that has happened, especially in the NBFC sector. We've seen a couple of good names, you know, falling down by more than 50%, DHFL, India Bulls Housing Finance. So the entire NBFC sector has been under a cloud. What are your thoughts on that particular sector?
Yes, after that debt default by infrastructure leasing and financial services company, there has been a big liquidity squeeze in the market. So NBFCs are finding it difficult to raise money. So this sector will be under stress for an extended period of time. Of course, you cannot paint all the NBFC companies with the same brush. You referred to 2 companies. There are a large number of companies. There are companies with very good parentage, an excellent track record, a good pedigree, like HDFC for instance, or M&M Finance, Bajaj Finance. These are very good companies, solid companies, and for them raising money won't be difficult at all. So they will continue to do well. But other names, smaller companies, medium-sized companies, they will find the going really tough. So the sector will be facing stress for the coming several months.
So 2018, basically a stock picking market, sectorally also you need to be a little bit careful on the market? So
yes, 2018 will be a stock pickers market. Not just 2018, we have only a couple of months to go. Yeah. And 2019, early 2019 also, because there is no one particular industry which we can just point out, which will be doing exceedingly well. Of course, there are some names like corporate facing banks, already they have run up quite a bit. They will continue to do well. The good names in the NBFC space will do well. And there are some segments, I won't call it a particular sector. For instance, what we are witnessing right now in the Indian economy is a major trend. That is a transition from the unorganized sector to the organized sector. So many industries, like for example, footwear, paints, construction equipments like plywood, for instance, or fittings, bathroom fittings, things like that. So these segments are like biscuits, another very good example. So in these segments, there is a very clear transition from the unorganized to the organized. So the organized players in this segment will do exceedingly well. This is not a particular sector. It cuts across sectors. Right?
So finally, what would be your advice for retail investors, a period of 6 months and longer? What would be your advice to the retail investors?
I would advise retail investors to use this volatility to pick quality names. Those investors who have the expertise and the time to invest directly in the market, this volatility will give them opportunity to buy good quality stocks at attractive prices. When you have a correction in the market because of some negative news or headwinds, prices will come down, right? Prices will. In October, for instance, very good names like Maruti, Bajaj Auto, Bajaj Finance, NMM, all these were available at attractive prices. So such corrections can be used by retail investors to buy good quality names. Investors who are investing through the mutual fund route should continue their SIPs, not bothering about the volatility in the market. If possible, they should invest more for the next 1 year. They can scale up their SIPs in the market. You referred to small and mid caps at the beginning of this interview. Small and mid caps have corrected. They are not yet participating in the rally, the recent rally, but now small and mid caps are attractively valued from a long-term perspective. It might take some more time. They won't bounce back as fast as the blue chip large caps, but retail investors can now think about investing in small and mid caps on a systematic investment basis. That is the investment strategy that retail investors should be following. Bulk investment is not advisable now. Systematic investment, if possible, try to scale up the SIPs.
Thank you very much, Dr. Vijayakumar. So there we have it. The stock markets are volatile right now. The Indian stock markets are facing headwinds as well as tailwinds, and that is contributing to this volatility. Retail investors are advised to continue their SIPs, invest and scale up their SIPs if possible, at least for the next 1 year. We can take advantage of the market volatility and then plan for the long term. Thank you very much for joining us.